Now, let's move to the historical overview of the audit and audit process. The historical review of the formation of audit procedures provides answers to the rules and institutions of audit science, the ways of organizing the audit profession, and audit guidelines. Accounting procedures have appeared since prehistoric times to illustrate the exchange of goods between people necessary for their livelihood and survival. The need to utilize illustration of claims and liabilities from the exchange of goods lent on one hand to primitive original accounting entries illustrations, for example on wood French trees plates, and also created the need to check the reliability of the transactions between the parties involved. Initially, people in prehistoric civilizations created rudimentary accounting records without the use of numbers and letters. But the development of trade between different population groups, tribes, led to the need for the use of written signs and symbol joinings that depicted movements of accounts and provided certain accounting information. This was followed by the need for measures to control the correctness of transactions, which would provide reliable and valid information regarding transactions to traders. The first period where audit appeared was the Ninevites in Egypt. Archaeological findings show that Ninevites in 5000 before Christ had enacted commercial laws that determined the way of conducting commercial transactions. The scribe noted the transactions on large tablets which he legitimized with his signature, and therefore he was considered the expert accountant of that period. Later, in ancient Egypt, there were scribes who were responsible for writing commercial and accounting records and constitute the administration staff. The scribes were in charge for maintaining enforcement of laws, collecting taxes, administering the properties mainly of temples, and senior officials controlling the administration and pointing out financial irregularities. In addition, they conducted population censuses, they calculated future harvests, performed tax forecasting, and adjudicated credits to the various public offices, and complied transaction documents, contracts of purchase and sale wills, performed internal audit and bookkeeping approval, and completed income tax returns of high officials. Also, in the Central Finance Department of the Pharaoh's House of the silver of the same funds, internal control and accounting were used. Secretaries prepared records of revenues and holdings of civil corn and other goods. Control was carried out by a different scribe who compared the records. Official order required for the movements, and the secretary as warehouse manager registered the holdings and maintained the order. The figures for farm income and other stocks were periodically checked by another scribe or his supervisor. The influential position of the scribes is also evident from the fact that their tombs were located near those of the pharaoh's scribes, where the present-day accountants, auditors, tax auditors, public property valuers. Then, the audit takes place in ancient Greece. In ancient Athens, there appears to have been a system of auditing the public finance of the city-state, as well as a system of monitoring and control by the body or Congress of Accountants. The body or Congress of Accountants was responsible for overseeing and monitoring the finance of the Athenian state. The corpus or Congress of Accountants had the task of controlling the management of the public wealth and the money owed to the demos. In addition, special accounts were kept of revenues and expenditures. Those found to be illegal were brought to justice. In the time of Pericles, every citizen was an auditor. It was customary for contractors who undertook the construction of public buildings to write their income and expenditure on building stone tablets. Later, in 400 before Christ, the law required the publication of the accounts of the lords. There was also a corps of auditors called Ephthini. The corps consisted of 10 ephors elected by the people who were responsible for auditing the finance of the lords who left office.